Okay, so let's unpack this. If traditional news is basically the world telling us what it wants to happen.
Yeah, like the aspirational stuff.
Exactly. Then prediction markets are kind of like the world's most aggressive lie detector test.
Oh, absolutely.
Because they're showing us in real time what people will actually put their own hard-earned money on.
Real money on the line changes everything.
It really does. And welcome to today's deep dive, by the way. Today is Thursday, April 23, 2026, and we're looking at a fascinating snapshot of current prediction markets.
It's a great stack of sources today.
Yeah, and the mission here is basically to explore this concept of, well, calculated skepticism. Because the story the money is telling is completely divorced from the institutional news headlines you see on TV.
The contrast is genuinely startling. I mean, the traditional financial press today, they're obsessing over standard industry valuations, routine tech earnings calls, the usual corporate chatter.
Right, the normal stuff.
But if you look at where the actual liquidity is flowing, where people are staking millions of dollars, it's moving directly toward government crises and global conflicts.
Oh, wow.
Yeah. What's fascinating here is just the sheer level of calculated skepticism we're seeing from the crowd today.
Calculated skepticism. I like that. That phrase perfectly captures what we're doing here. Because we want to explore what happens when the official podium says one thing, but the money does something entirely different.
It happens more often than you'd think.
And to see how deep that skepticism runs, we really have to start with the biggest domestic reality check on the board, which, is directly threatening the upcoming summer plans for millions of people.
You're talking about the Department of Homeland Security shutdown.
Yeah, the DHS shutdown.
It's undeniably the defining domestic issue of the moment. I mean, we are currently sitting at day 69 of the shutdown.
Day 69.
Which officially makes it the longest in the agency's entire history.
69 days of federal gridlock. And this isn't just like an abstract political debate happening in a vacuum. On the prediction platform Kalshi, this is the #1 trending domestic topic.
It's pulling in huge numbers.
Over $17.3 million in trading volume. Traders are heavily betting that this situation is nowhere near a resolution.
Right.
In fact, the sources show a 54% probability that the shutdown lasts at least 100 days, which would drag the whole ordeal into June.
Which runs completely contrary to the official narrative being broadcast from Washington over the last 24 hours.
Right. And here's where it gets really interesting, where the lie detector kicks in. Because yesterday, April 22, the news was dominated by the Senate passing a stopgap measure.
Yeah, for frontline staff.
Exactly. A legislative band-aid to keep them paid.
Right.
But the prediction market sees that Senate action and practically ignores it. The 54% odds haven't budged.
Not at all.
So I have to push back on these traders for a second. The Senate passed a stopgap. Are traders just being overly cynical here? Or is this $17.3 million basically people buying insurance against their summer vacations being ruined by TSA bottlenecks?
It leans heavily toward a practical, highly rational response, honestly.
Really? How so?
Well, to understand why the market is brushing off that Senate stopgap measure, we have to look past the headline. We have to look at the mechanism of how legislation actually becomes a paycheck.
Okay.
A stopgap requires approval from both chambers of Congress. The Senate passed it, yes, but the House immediately recessed without taking any action on it.
Wait, they just recessed?
Yeah. So the market looks at that legislative Band-Aid and realizes there is literally nobody left in the room to apply it.
Oh, wow. So it's performative.
Precisely.
Yeah.
And that creates a cascading operational failure because there is a very real impending pay cliff hitting in early May for TSA and Border Protection employees.
A pay?
Right. A piece of paper sitting in an empty House chamber doesn't process payroll. The traders are discounting the performative legislation and focusing entirely on the operational reality.
Which is that the money runs out.
Exactly. When those paychecks bounce in early May, the friction at airports and borders will skyrocket. Employees will call in sick, security lanes will close.
So it's basically functioning like an early warning system.
Exactly.
You don't have to be a political insider to care about a federal budget standoff. Like keeping an eye on specific TSA wait time markets for hubs like NYC or Mumbai tomorrow could actually be highly practical.
It's extremely practical because money on the line cuts through bureaucratic optimism. If a trader has $10,000 at stake, they aren't listening to a press secretary.
No, of course not.
They're tracking actual staffing levels at Terminal 4. They're looking at union chatter, sick out rates, historical data.
It's almost like living in a hurricane zone. You don't just watch the official Weather Channel to see if it's going to get bad.
Right. You look at the hardware stores.
Yes. When the plywood and bottled water completely sell out, you know the storm is actually making landfall, regardless of what the forecast says.
That is a perfect analogy. The prediction market is the empty plywood aisle. It shows you the physical preparations people are making.
Well, that dynamic, the empty plywood aisle, becomes incredibly stark when we look beyond domestic gridlock. Because the market calling the government's bluff over a travel delay is one thing.
Right.
But the sources point to an even more dramatic example on the global stage. This time, aggressively betting against an official political announcement regarding military conflict.
Yeah, we are looking at a highly precarious situation in the Middle East.
So, according to the material, President Trump announced a fragile, quote, extended ceasefire yesterday, April 22.
That's the official stance, yes.
Right. On paper, a ceasefire is in place. Yet despite this, if you look at Polymarket, there's a staggering 86% probability of U.S. forces entering Iran by the April 30 intervention window.
It's a massive disconnect.
How does a regular person process that? We have a president officially announcing a ceasefire, yet the crowdsourced money says there's an 86% chance it fails within 8 days.
It's incredibly jarring to see those two things side by side. But breaking down the why behind that 86% figure reveals how these markets aggregate intelligence.
Okay, so it's not just random guessing.
Not at all. If we connect this to the bigger picture, it's a profound signal that the market expects rapid escalation by month end. They are completely discounting the diplomatic news cycle.
But what specific mechanics allow a crowd of internet traders to discount a formal presidential announcement so heavily?
Well, it comes down to the difference between strategy and logistics. Diplomatic announcements are frequently aspirational, or, they're strategic maneuvers designed to buy time for troop repositioning.
Oh, I see.
But the prediction markets, they aggregate hundreds of thousands of independent data points that the official narrative is either ignoring or keeping classified.
Meaning they aren't listening to the speech, they're watching the supply lines.
Yes, exactly. Traders might be tracking localized shipping insurance premiums in the Strait of Hormuz.
Oh, interesting.
Yeah, if commercial insurers suddenly quadruple their rates for cargo ships overnight, they know something is imminent. They track satellite imagery of military equipment movement.
Right, the raw logistics on the ground.
Exactly. Stripping away the theater of diplomacy.
But let me pause on that, because an 86% probability for a geopolitical event just days away is a massive number. It implies near certainty.
It does.
Which forces a very uncomfortable question. Who exactly is placing these bets? A regular person isn't seeing classified shipping changes.
No, they aren't.
So who is holding the financial leverage here?
Well, this raises an important question. You're hitting on the $143 million elephant in the room.
Yeah. The sources show a group of brand new accounts made $143 million in combined profits on perfectly timed Iran-related trades just last week.
Perfectly timed.
Right. Are these traders just brilliant geopolitical analysts who read the tea leaves? Or are we looking at a terrifying new reality where classified military intel is being treated like insider stock tips?
That's the core issue. In financial terms, we're talking about asymmetric information. In the stock market, trading on non-public material information is a federal crime.
Right, insider trading.
But prediction markets dealing with global conflicts occupy this vast legal gray area. How do you even define an insider in a war? Is it a defense contractor? An intelligence analyst?
A diplomat's aide. I mean, the sheer volume of those profits from new accounts suggests someone knew the test answers before the exam started.
Precisely. And it's not just about stopping a few lucky accounts. It's about the CFTC grappling with the fundamental morality here.
The Commodity Futures Trading Commission.
Right, the regulatory body. They've actually opened a public comment period right now to decide the future of war-related betting in the U.S.
And the timing of that is wild. The public comment period closes on April 30.
The exact same day as the intervention window.
Right. The regulator has to decide if this entire ecosystem is legal on the very day it might prove to be historically accurate.
It's a profound ethical dilemma. They have to ask if allowing U.S. citizens to monetize war intelligence creates deeply perverse incentives.
It totally warps global stability.
Yeah.
If an institution knows a peace talk is going to fail, and they stand to make $50 million betting on its failure,
they have zero incentive to help those peace talks succeed.
They might even have an incentive to quietly sabotage them.
That's the argument for banning them. But on the flip side, proponents argue that revealing the true odds, like that 86% probability, forces the public to confront the actual reality, stripping away illusions.
Regardless of the ethics, that $143 million payout shows these markets are too large to ignore now.
Absolutely. April 30 will be a defining day.
It's incredibly heavy.
Yeah.
Government pay cliffs, global conflicts, the morality of war profiteering. I can entirely understand why the listener right now might be looking for a place to hide from all this.
Oh, completely. But fortunately, liquidity behaves like water. It flows everywhere seeking the path of least resistance.
And right now, a massive amount of that liquidity is flowing into escapism, right? Leisure, sports, tech.
Yes, the sports and leisure money is finding a home.
Let's unpack this sports market because the scale is wild. We mentioned the DHS shutdown command, $17.3 million. But if you look at Polymarket right now, the absolute liquidity king is the 2026 NBA champion market.
It's staggering.
It has over $231 million in volume. $231 million over who throws a ball through a hoop.
It's an order of magnitude larger than the domestic political crisis.
The specifics are fascinating, too. The play-in tournament is over. The first round is underway. The defending champion OKC Thunder are at 50% even money to repeat.
Right.
The Boston Celtics are at 31%. And then the San Antonio Spurs are sitting at 16% as this trending dark horse, all following Victor Wembanyama's late-season surge.
He's been incredible.
But why does a basketball game attract nearly $250 million while global events struggle to hit $20 million?
It really comes down to market mechanics and the psychological safety of certainty. That $231 million represents pure leisure money that wants a clean resolution.
Because the play-in ambiguity is over.
Exactly. Think about the DHS shutdown or a ceasefire. Those events have moving targets, ambiguous resolutions, shifting definitions.
But a basketball game has a buzzer.
Yes. There is a definitive, undeniable winner and loser. Nobody's debating if the game ended. That structural clarity attracts massive liquidity.
It's safe.
And watching a talent like Wembanyama surge gives retail bettors an optimistic narrative they actually want to invest in, completely devoid of ethical baggage.
That makes total sense. And that flight to optimism isn't just in sports, it's making huge waves in tech, too. The sources highlight two massive trends for retail investors.
The tech whispers are very loud right now.
Right. First, there's a 74% probability on Kalshi for a SpaceX IPO announcement before July 1. 74%. Why is that specific number such a major signal for the average retail investor?
Because a SpaceX IPO would trigger a massive liquidity event. It fundamentally alters the valuation landscape of the entire tech sector.
Okay, how so?
Well, when you see a 74% probability on a crowdsourced market, it indicates that the people closest to the source, institutional money, employees with vested options, connected VCs, they are all quietly aligning their bets.
So it functions as a highly accurate rumor mill for Silicon Valley.
It does. And if that IPO hits, the billions unlocked will immediately flow into adjacent tech stocks as index funds rebalance.
So simply seeing that 74% probability is a mechanical signal to check the tech allocation in your 401k.
Precisely. It's a leading indicator for your personal finances.
And the hardware whispers are crazy too. Apple is currently sitting at an 18% probability for a foldable iPhone announcement at the June WWDC.
Which is high for them.
Yeah, 18% might sound low compared to the 86% for Iran. But the sources explicitly note this is based on emerging supply chain whispers of a 2026 prototype.
Right, context is everything. Apple locks down internal hardware development tighter than defense projects. So for a market to price a new form factor at nearly 1 in 5 odds, it tells you the manufacturing supply chain in Asia is leaking.
Because you can hide a concept in a boardroom, but you can't hide millions of custom glass panels in a factory overseas.
Exactly. The market aggregates those supply chain anomalies. That 18% is the financial manifestation of 100 logistical whispers.
Oh, wow. So pulling all these threads together, the defining characteristic of April 23, 2026 really is calculated skepticism.
It's the through line for sure.
Whether it's a DHS pay cliff, satellite imagery predicting escalation despite a ceasefire, or factory retooling hinting at a new iPhone, the money consistently bets against the official institutional narratives.
The crowd is constantly looking past the rhetoric to price in the operational reality.
Which brings us to the core value of this deep dive for you, the listener. Because even if you never place a single bet on a prediction market, observing these odds provides you with a razor-sharp, hyper-realistic filter.
It's a tool.
Exactly. It helps you cut through the noise of the daily news cycle. When the headlines say one thing, but hundreds of millions of dollars bet on the exact opposite, it gives you permission to question the official story.
It equips you to ask, what are the financial incentives actually revealing, rather than just listening to the podium?
But I want to leave you with one final lingering thought to mull over today. We spent this entire conversation talking about how these markets aggregate data to predict the news better than the pundits.
Right.
But what happens when these prediction markets become so massive, with billions of dollars on the line, that they stop merely predicting the news and start causing it?
That is the ultimate unexplored frontier here.
Right. If an IPO or a foreign policy move is given a 90% probability, does the weight of that crowdsourced money force policymakers and CEOs to act just to satisfy the market's expectation?
It's a fascinating question.
If the world's most aggressive lie detector gets powerful enough, at what point does it stop measuring the heartbeat and start telling the heart how to beat? Definitely something to keep in mind the next time you read the headlines.